Good morning, everyone, and welcome to today's daily market review. It's the 15th of March 2021. This is Mohammad Yaoud, Head of Market Research at CJC Markets in the MENA region. We're having a new trading week, a busy week ahead. We do have the Federal Reserve interest rate decision to be announced on the 17th of March. Basically, markets are waiting to see what do we have on the end. What do we expect from the Federal Reserve, especially that we are having another leg up on the Treasury yields, especially the 10-year notes. How does this affect the market? What do we have on the charts? What does the technical analysis tell us? Please stay tuned. Welcome back, everyone, and let's start by having a quick look on the US dollar index, which is basically still hovering around the resistance key level of 91.70. We did break to the downside. It was a false breakout. We did have another break to the upside, a retest, which so far seems to be a successful retest, and we are trying to push higher from those levels again, 91.70. As per the momentum indicators on both the long time frame or the medium time frame, the 4-hour, and the smaller time frame, the 30 minutes, we are still suggesting a higher move upside to target those levels of 91.95 or roughly the highs at 92 points. We are talking about this level roughly. That's what we are expecting on the dollar index through the day, especially that after this retest we did have this move to the downside on the 30 minutes time frame. We created a new higher high along with a new higher low. This is the beginning of a new push to the upside to target the levels of 92 points roughly. That's what we're expecting on the US dollar index. More bullish potential to the upside, especially that on the US 10-year notes we have finished the downward correction. We are trying to create a new higher high on the 10-year notes. We're currently trading at 1.62%, which is basically bullish and gives more upward power to the dollar index. On the other side, regarding the gold trading, this is basically something that could be negative on the gold trading. So at the moment we're trading at around $17.24 per ounce. Basically, the highest point that we should look for is the high that we created on the 11th of March of 1740 roughly. As long as we're trading below this level, we're basically bearish on gold trading to retest one more time the levels at $1,700. So we might have an extended move to the upside. However, we shouldn't be able to create a new higher high on the above $1,740 per ounce. That's for the gold trading. So we are expecting a move upside on the dollar, a move south on the gold trading, and that's what we're having through the day. Let's have another look on oil trading. It's currently at $66 per barrel for the US crude oil. We are basically bullish on the US oil. However, it seems that the upside momentum is now weakening. We did manage to create the highest high at the 67.71. That's the highest high that we have reached. And on the 30 minutes time frame, the uptrend is not so powerful. We can see also on the 4-hour time frame that we're having a negative divergence starting to create here. So we are on the longer time frame, we are bullish on US crude oil. However, on the shorter time frame, we are expecting a pullback that might extend to those levels of 63.30 or 63.12, pardon. So we are expecting something like this on US crude oil that might extend into a wide range trading or a sideways range before continuing the move to the upside, and that's what we're having on the US crude oil. Let's have another last look on the Dow Jones index, which basically surprised me a little bit because we weren't expecting this upward move with a strong momentum. However, we did have this brilliant upward move supported by a stronger momentum. So we are at the moment, we will just follow the trend. With every correction, we will be buying the dips and targeting more potential to the upside. However, let's note that at the moment we're trading at 100% Fibonacci extension from the previous upside move. So we might be expecting a retracement during the day, just a correction, a minor correction, to test those levels of roughly 32,050 points. We might be having a pullback to retest those levels one more time before creating a new higher high, supported by the optimism from the fiscal 1.9 or the monetary 1.9 stimulus package. So we are bullish on the Dow Jones, waiting for a correction through the day, and we'll ride the trend along with it. So that was all for today's video. Thank you very much for catching up with the daily market review. Once again, that was Mohamed Yaoud from CJC Markets in the MENA region. Thank you for watching, and please stay safe.
CJC Markets is a leading global financial institution that has granted a derivatives issuer license issued by the Financial Markets Authority New Zealand. CJC Markets has a wide range of products, latest technology platform, and eminent customer service. CJC Markets offers superior execution, competitive spreads, and low transaction costs. CJC Markets. Smart trading, smart life.